Hello and welcome to the 2021 Empower Leaders series, which will be bringing together the most senior experts in the investment industry to share their knowledge and experience and examine strategies of how to succeed in the most challenging of times. What are the most insightful and ambitious CEOs doing to prepare for the post-COVID world? How are they rethinking their businesses to achieve sustainable profitability? And what does all this mean in terms of embedding new culture, collaboration and technology? I'm Emma Walden and I'll be talking to Amundi's Deputy Director General Nicolas Calcoen about how this industry must now play a key role in the global economic recovery and building sustainable profitability throughout. We're also delighted to be joined by Nuala Walsh, Martin Gilbert, Stephane Corsaletti and Samantha Seaton, who will be discussing what it will take to build back better and how to protect customers and drive performance in a high-risk, tech-accelerated world. Well, on your screens are a number of different modules to support today's sessions. Here you'll be able to find the resource module, which has links to relevant articles and white papers covering topics being discussed today. There's also an Ask a Question module. We won't be answering those questions live today as there's a lot to cover, but do submit your questions throughout the sessions and we'll be collating these and putting them to today's guests to answer. You'll then be sent an email which will allow you to access all those expert responses in the follow-up to the sessions. Finally, there's a feedback survey which will appear at the end of the session. Please do have your say on what you thought of the topics we discussed and what you'd like to see covered in future Empower Leaders events. So now let's begin with our first leader navigating these exceptional times. Welcome to our first Empower Leadership interview for 2021, and I'm delighted to be joined by the Deputy Director General at Amundi and President of the European Fund and Asset Management Association, Nicolas Calcoen. Nicolas, welcome.
Thank you very much. I'm very glad to be with you today.
Nicolas, could you begin by summarising for me what's been key to Amundi, particularly weathering the COVID storm over the past 12 months? I mean, what did you already have in place, perhaps, that was crucial, and what did you action as a result of the many challenges the pandemic posed?
I think, as for many companies and many asset managers, indeed, last year was a very, very particular year. And we, exactly 1 year ago, in March last year, we all, I think, had to face a similar challenge. First of all, of course, an operational challenge, because in a few days, we all had to go back to home and work from home. And obviously, working from home is something that has been prepared, experienced, but not at such a large scale. And I think we all have a business continuity plan. I'm not sure in all this business continuity plan, this possibility has been completely prepared. But nevertheless, we managed to do it again in 2 days. More than 90% of all the staff around the world went back to home, and the challenge would continue to operate, and we managed to operate. Of course, we had to adapt a little bit our IT capacity, but it was done very rapidly because we have a very performing one. And this first challenge, I would say almost at our surprise, was overcome quite rapidly. Second challenge, of course, was an investment challenge because all that happened when at the same time markets went to a massive turmoil with liquidity going down and all markets going down. So it was also a challenge for all our investment teams. And here again, I'm very happy to say that we went through this crisis with no damage. Absolutely no fund at Amundi had to put gates or to limit redemptions. And I would say for the European industry as a whole, the case where it happened were very limited overall. So overall, it was a real stress test for liquidity management in terms of crisis. And this test was well passed, even if there's always lessons to draw from this kind of experience. And third challenge, it was also a challenge in terms of access to client and in terms of distribution, because for a relatively long period of time, it was not possible to meet them. It's still very difficult to meet them. So totally new ways to organize contact with clients through virtual experience and digital manners rather than physically. And here again, thanks to all the digital tools that has been developed at Amundi, as I would say in the industry overall, we managed to get a very close contact with clients, especially at a time in time of crisis where it's very essential to be in permanent contact, to explain what's going on, and to do our job, which is also to provide advice to our clients.
So that's a bit about Amundi's approach, and I guess as arguably Europe's largest asset manager with more than 1.7 trillion assets under management, you'll be a key player when it comes to the question of how this industry can play a central part now in that global economic recovery that you touched on there.
So what I described indeed was managing the crisis. Now, obviously, the helm of the crisis is behind us, but the consequences in terms of the financial, but more importantly, the economic and social consequences are still there and are probably in front of us for some time. Hence, the importance of all the plans that have been designed by public authorities in the US. Of course, we just saw the Biden plan adopted in the US, but also in Europe through the action of the ECB, the action of the national authorities, and the action of this welcome European plan, with a lot which is done to ensure as speed as possible recovery, and to take also this circumstance as an opportunity to transform more our model, including in terms of having a more sustainable growth. In that field, I'm really convinced that the financial industry and the asset management industry has a key role to play, because there's a lot of investment needs. Investment in terms of ensuring this transformation, including in going to the more sustainable growth, investment in infrastructure, investment in also in transforming the economy to make it a more digital economy. So a lot of needs, probably also reinforced by the need to finance companies, especially on the equity side, to overcome and to improve their situation. So a lot of investment and long-term investment needs on one side. On the other side, and that's almost a chance, a lot of savings, which is available. Last year, through the crisis, we also saw in Europe an incredibly increase in savings. We saw it in all European countries, with saving rates going up very significantly. But we have a challenge, because most of these savings went to, I would say, cash or banking deposits, so short-term investments. For example, I think it's coming from the statistic from the European Central Bank. Over the first 9 months of 2020, the European households invest, I think it's more than 470 billion euros just in cash and deposits. And we need this money to be invested more long-term. So it can go through banks, but we need also direct investment from investors, and in particular retail investors, going to these long-term needs I was mentioning. It's I would say it's good for the economy to finance these needs. It's also good for them to have possibly higher returns in a very low rate environment. And that's where the industry has really an important role to play, to channel these savings to investment. And to do that, we need to do our job, to provide the right advice, to provide adequate products that correspond to the needs of the clients and that they can understand easily. So a real challenge, but a big role to play. I'm really convinced of that. And I think it's heavily recognized also by policymakers and regulators.
And two things you touched on there that I'd like to just reiterate. You talked very much about how this industry can be key in that drive to the greener economy. And I guess from what you said there, that's something that investors and customers are increasingly expecting as well. So it's a demand being met, if you like. How realistically can that be achieved, and what do you have to have in your teams to be able to push forward with that? I guess it has to be quite collaborative across industry, but also you have to have the right diversity and knowledge of geographies perhaps within your teams.
First of all, this direction is really one that has been that is really taken very strongly by the industry. It's not new. Investment and a lot of asset managers develop their approach towards the sustainable investments, towards ESG, and they can contribute very strongly to this objective by two ways. First one is to integrate non-financial criteria, environment criteria, but also social criteria that are more and more important in their investment process, and to channel more investment toward the companies, the issuers that have a behavior which is more favorable to the environment, to the society. That the development of ESG approaches, ESG funds, and there are many. And the second, of course, is as investors, we are shareholders, we vote, we engage in issuers, and this dialogue is also more and more important. And you have seen more and more, you see when the time for annual shareholding meetings is coming, asset managers interacting with the issuers, with the companies, and try to gear them to take more into account environment and social criteria. So a lot is done, and it's really what is significant last year is that it's really becoming mainstream. Just an illustration, in Europe, in 2020, it's around 75% of the total inflows in long-term assets that went to ESG products. So there are different ways to do it, but still, it's really really becoming impressive. So a very strong contribution from the industry, and I think now all players are mobilized. What it takes to go on, and you are mentioning the question of the team and the people. Yes, you need a lot of diversity, you need different angles, and ESG is not only the environment and the social part of the S and the G, but the S of ESG is also becoming more and more important, and that's also something we are seeing through the crisis, because we see the consequence, the social consequence of this crisis. So you need different approach, and I think also the main challenge is for, as ESG is becoming mainstream, is to ensure that, including within our teams, among our colleagues, ESG is not something for the specialist. Of course, we need specialists to define methodology, to ensure consistencies and so on, but to ensure that this sensitivity is spread across all your teams, across all your investment teams, of course, because they are the ones that have to take into account this criteria in their investment decision, but also for marketing people, sales people, because there's a request from clients, they need to explain what we do. So I think from a HR point of view, the main challenge is this one, to ensure that ESG is everywhere and not a question for specialists.
Also, in your previous answer, you talked about tech acceleration and what you'd seen there and coping with that in this environment. And I guess you talked there about marketing as well, and the sort of drive towards this sort of tech-first approach means that customers and investors expect to have access to lots of information as well. Tell me a bit about what you've seen in terms of that development over the last 12 months, and how much are you embracing that as a really useful tool to inform investors too?
Here again, what we have seen last year is not something totally new. It's an acceleration. And clearly, as I mentioned, when suddenly in one day you have to work on home and discuss with your clients from home or from your office sometimes, it changes the way you work, and you have so there's a clear acceleration from the expectation from the clients, whether they are individual clients, whether they are individuals or distributors, which remains the main way for in our industry to interact with the end retail investors. They need digital tools, they need easy access to information. So again, not something new, very significant acceleration, and well, there's no other way to go. You need to develop that, and I believe that the fact that you are an owner of your technology, or you have the control of the technology, is an important aspect, and will continue to be more and more an important aspect of the business going forward.
With so much change, both across that technology part and the move towards greener economy, and also measuring, ESG qualities in companies, what are the key things in terms of I guess, regulation and policy to ensure that there are correct measures in place and these things can be looked at thoroughly and properly, and companies can be seen to be doing exactly the right thing?
First of all, I would say as much as possible a stable framework. At the same time, we know that the legislation and regulation has to be adapted to change in the environment and to lessons taken from the crisis. But it's also stability in the rules as also a value per se for clients, for the investment teams to know how to work. So to do change when they are needed, yes, but a careful assessment of where we need to fix something and not change for the sake of changing regulations. I know it's a bit a cliche, and it's not specific for the industry, but the financial industry has been for the last 10 years under constant change and new regulations, and sometimes it's good to take stock of what's going on, what's working and not, and really try to fix what needs to be fixed and not what is working. First point. Second point is, I think overall we need an overall framework that gives the adequate incentivation to what we were discussing, the need for long-term investment. Meaning, again, in particular, when you are talking about retail clients, they need to be protected. Investor protection, which is an overarching theme of regulation, is an important aspect, and it's important to do it. But to do it properly, in a way that is not detrimental to promoting a long-term product, long-term assets, because otherwise you are going against the interest. If you try to overprotect the client, at some point you may go against the interest of the clients, because okay, they will keep their money in cash, and that's not what is needed by the economy. That's not what is needed in their long-term interest. And to ensure also that regulation, taxation is adequately framed so that it incentivizes long-term investments. And for example, at European level or in many member states, there are change or has been change in product design for clients to prepare for pensions, for their future. It really is a very interesting way to combine the interest of the financing in the economy and the interest, long-term interest of the households, is to prepare for their retirement. And I would maybe, since you were in particular referring, and we are referring to the challenge to go for a greener economy, the question of that data is really important. We have a responsibility in taking into account extra financial criteria on data in our investment process. But to do that, we need to have the data. So we need to have the issuers delivering the data that we need to take into account in our processes. And we need this data to be accessible. So that's why at EFAMA we have important discussions about the taxonomy of ESG products, the disclosure regulations, but also the non-financial reporting coming from issuers, and also the need to have a look to the situation of a data provider to ensure that there are fair competition and as far as possible has easy access to this information, which allow us to do our job and to deliver the promise we give to the end customer.
So it sounds like you're talking about everyone working together for the right outcomes for the investor. Thank you so much for joining us. That's all we've got time for, unfortunately, today, Nicola. But thank you so much for sharing your insights. It's been great to talk to you.
Thank you very much. It was a great pleasure for me. Thank you.
Welcome to the Empower Leader series. I'm Nuala Walsh, founder and director of MindEquity Consulting, and today we have a highly distinguished panel who are joining me to discuss new ways to protect consumers and to drive investment performance in what is an incredibly high risk and technology accelerated world. So welcome Samantha Seaton, CEO of MoneyHub, Martin Gilbert, chairman of Revolut, Stephane Corsaletti, CEO of Allfunds. Perhaps each of you might start by introducing yourselves briefly and share with us why you think this topic is so relevant to your business right now. Samantha, maybe we'll start with yourself.
Thanks, Nuala. Well, just to say really that I see the direction of travel being towards the consumer. Everything I see in terms of technology, whether it's GDPR in terms of legislation, right through to blockchain, cryptocurrency, as we'll all be familiar with at the moment in the market, everything I'm seeing is heading towards consumer control over their finances and over how they share their data with what we've traditionally seen as the financial services industry, where we felt we owned the data. And I think that's quite a significant shift. And I guess what we set out to do at MoneyHub is to enable the consumer to control all of their own data and to share that data with people that they need help from and with, and ultimately get everyone into the fields of financial wellness, which is what motivates me and the team at MoneyHub.
Great, thanks, Samantha. Martin?
Yeah, no, I agree with Samantha. The world of finance is shifting towards the consumer. So we see that at my old shop, Standard Life Aberdeen, tilting towards the consumer, and I see it at Revolut very clearly, with their strategy of trying to have a one-stop shop for clients to be able to do all their financial needs on the app. So yeah, it's very, very much shifting towards the consumer, away from what in the past were institutional pension funds, basically.
Thanks, Martin. And Stephane?
Yes, good morning, everyone. So Stephane Corsaletti, Allfunds CIO. So I'm based in Luxembourg. I joined the company 1 year ago, coming from ABN AMRO, where I was heading the asset management of the private bank. Maybe a few words of introduction to Allfunds first. What Allfunds is a global fund distribution platform operating on a B2B mode with approximately 1.3 trillion euros of assets under intermediation. And basically we connect, the two sides of the fund industry from manufacturer to distributors. Through Allfunds, approximately 2,000 fund houses distribute their product to 1,500 client institutions, so retail and private banks, insurance companies, pension funds, and other distributors such as IFA platforms, endowment fund, etc. And when it comes to the panel of the day, and in particular this notion of a tech-accelerated world, I must say that it clearly resonates to me in the sense that Allfunds operates as a wealth tech. You know, it's a digital one-stop shop for fund distribution. We do also offer investment solutions to our customer, and we have a dedicated team for this purpose, while providing our clients with advanced fund research, sub-advisory solution, as well as outsourced CIO. Everything being available into a digital interface that we call Connect.
Great. Thanks all. I think you've all picked up on very similar themes, which we'll explore further now. But maybe just going back to you, Samantha, for many years, we know the industry has really underinvested in this space, whether it's in technology-driven systems or solutions. To what extent do you think the shifts that both Stephane and Martin have talked about, as well as maybe the pandemic, have accelerated this urgency? And maybe you'd like to share how MoneyHub has responded in this regard.
Well, I think you're right. The pandemic has certainly, I think, focused everyone on how we actually can do what we do digitally. I mean, it is actually possible. And I think there is a, dare I say it, an era in our industry which probably didn't believe it was possible. So I think that's really what has really galvanized the troops. But I think really the shift was already there. We need to stick close to the consumer. And the platform that we have is very consumer focused. So that's why we really think what we do helps those businesses that don't feel comfortable building or taking responsibility, if you like, for actually doing the type of collation of it's personal financial information, isn't it? I mean, it's our bank accounts, it's our investments, our house price, our valuations. It's very personal financial information. But actually, if you look at what the FCA is driving at, we've actually got no choice as an industry but to interact with people in a way that's very granular. Because, in terms of knowing the customer well, the affordability, all of those elements now, the FCA is really saying to the community at large, you have got to get to know the customer. And speaking to someone the other day, and I said to them, well, of your advised clients, how many of them bank online? How many use their banking apps to do that? Honestly, no idea. And it's like, but they probably know the names of their children and the dogs. But what I'm getting at is the shift in thinking about how you think about knowing your customer is quite a big shift for us as the industry.
It's a great point, Sam. And I know, Martin, Revolut, you've got 15 million customers. And I think you're on 100 million monthly transactions. It's a huge challenge, not just to understand your customer base, but maybe to try and how you balance a fintech startup's growth with the ability to manage not just understanding the customers, but also that operational complexity. What challenges, I guess, are you facing in that regard at Revolut?
We know quite a bit about our customers, actually. We know where they're spending their money, and we supply that information in a very general form where they are to various governments. So we can tell in France that actually it was McDonald's was the biggest area, and in the UK and Ireland it was Lidl, actually. So we do know a lot. It's interesting. I think the challenges fintechs have is the regulatory challenges, because they're used to doing things at speed. They're very quick. They've got great culture. So I think, but regulators find that difficult. So I would say that's the biggest challenge. And they're growing so fast globally that regulators are wary of companies growing this quickly. But I think the one thing regulators are pleased about Revolut is just the sheer benefit to the customer. I mean, what it's done for individuals in terms of foreign exchange and all the other services we offer to clients is immense. I mean, the amount of money we save on Forex, as I say. And the interesting thing, which will amuse you, is I reckon we have most FTSE, we have a lot of FTSE CEOs as clients, because I can tell when something goes wrong, they email me. So, but it's amazing. The usage is just incredible.
Well, I hope you don't get too many calls.
No, one a day.
Stephane, you must face similar problems, to be fair. I mean, you referenced earlier on your 1.3 trillion and, 1,500 or 2,000 distributors. That's massive pressure. And, the investment that, have been made in the companies that we've just heard about and in Allfunds is phenomenal. And it's very hard to marry the cost of investment, I guess, with the fee pressure that people are talking about. And I've been extensively feeling, including your own distributors. How do you think your distributors are dealing with this? And are there any options that they might strategically consider going forward?
Well, it's true that while the pressure on fees does not only impact on asset managers who are facing competition from passive instruments for years, but also on distributors who are actually on the fore of this pressure, which is primarily coming from their clients themselves, as well as from the regulators. And one must admit that in our deflationary world, fee compression is a common feature, and that it's here to stay. So we need to help our distributors while dealing with such a situation, and they need themselves to find the right solution to deal with this. Well, how to do this? Well, there is no rocket science. I mean, they need to act on cost. In the one hand, their costs need to be trimmed, and at the same time, they need to find ways to increase their revenue pool. So, how to do this? I believe that on the cost side, they need to further outsource. I'm not talking here about outsourcing like 10, 20 years ago, IT, office management, payroll management. I'm really talking about the core services, or at least those services that were until now considered as core. I have in mind, fund research, investment due diligences, and even portfolio management. So in the same way that banks started to outsource their rebate management to Allfunds 20 years ago, we believe that the time has come to outsource core function in order to better focus on their clients, and this is the reason why, for example, we decided to promote an outsourced CIO offering that will be dedicated to retail and private bank. When it comes to the revenue side, I believe that while there are clearly solutions in order to enhance the value proposition and therefore to be in position to charge more fees to the clients, I have in mind sub-advised funds, which is something that we are going to introduce soon. I have in mind the private space and illiquid instrument that clearly deserve more management fees.
Great, thanks, Stephane. I think we've touched on quite a few topics now. One that you've all sort of raised indirectly, and I think maybe Samantha, you might have touched on it directly. What else do you think the industry can do to protect consumers from themselves? So, I mean, it's a different way of thinking about it, and in particular, I'm thinking of the more vulnerable sectors, segments, the elderly, or maybe even the overconfident millennials who, are very keen to do day trading. We've seen a lot of examples recently about how this has gone quite seriously wrong. And then I'd be interested in anyone else's thoughts on this one.
So, well, from my perspective, I think, first of all, the best thing you can do is to surface what is happening and in real time. Because if you know what is happening in real time, at least you can stop it from going too far wrong. So first of all, I would say that, that to me is the critical bit. I was on a panel recently where I think one of the concerns I think a banking compliance person had is, around all our fintechs, which would have, I suspect, caught Revolut in that as well. They were having a bit of a worry, and they said, what if you empty your bank account, using these fintech businesses? And I said to them, well, you can actually do that now on your bank account. I can empty my bank account. So I think sometimes we panic about things that we can already do. And I would just say by elevating it with technology to make it real time and very visible, that's a really good step. And then secondly, I think there's also ways of actually enabling you to have what I call some automated alert features, which actually, because of the machine learning algorithms we're all using, our ability to be able to understand proportion. So I don't know, you want to go and do a day trade of X, and we can straight away just saying, it's 90% of your savings. Are you sure? And just the context of like, oh yeah, maybe I don't want to do 90% of my savings actually. So just the ability to servicing that. And look, I don't think we personally should stop them. If they want to put 90% of their savings into something, I really do think that is their choice, and freedom of choice to me is very important. But perhaps absolutely just surfacing the context for something at that point of impact wouldn't be a bad idea. And just on the vulnerable customer bit, I mean, obviously I obviously have one of those in the form of my mother, and she's never going to use an app. She's not going to use Revolut. She's not going to use anything we produce. But one thing that we do on the platform is connect and share. So the ability for people to be able to share their accounts once they've set them up. So obviously my mum would need some help doing that. But the ability to say to me, Sam, you keep an eye on my accounts for me, because that makes me feel comfortable. I can't do anything, so it's read only, but at least I can see real time what's going on.
She doesn't trust you, Sam.
And not she definitely doesn't trust me to spend the money, that's for sure. I think she knows it will disappear. The bank account will be empty.
Any other thoughts from anyone else?
Yeah, I would say I would say that I agree with Sam. It's not our job to stop them, but we can put sufficient warnings and so on. I think the key is not to offer leverage as well. So if someone wants to trade on Revolut, trade stocks or trade crypto, we don't provide leverage, so they can't gear up, which they can on some other sites. So I think that's the key thing, because I think leverage is the real killer, because if you do get it wrong with leverage, you can wipe out everything.
And actually, Martin, just sticking with you for a minute, you mentioned earlier on about the shift, the consumer shift. I guess over the years you've seen many shifts in the industry. Some good, some not so good. For you, what has been the one or two that have surprised you the most, do you think?
I think ETFs have definitely surprised me. I mean, I think I could see active to passive, but I'm really surprised that I think it's, don't get me wrong, it's great for the consumer again. I think the one area the consumer can't participate in yet is this move from public markets to private markets. There's no real way for them to access that. And I think that will be a big thing, a big area going forward, because private individuals want to invest where institutions can. And I think that will be a big area. But I think in that area, we've got to make sure that they understand there's no liquidity, that you're sacrificing liquidity for growth there.
And does our CIO have a perspective on that one?
Well, it's a very good point. I believe that this topic of moving our clients' assets from public to private instrument is absolutely key. At a time of zero interest rates and well-valued stock markets, it clearly makes sense to provide our clients with a solution, allowing them to get access to this asset category. And it's not that simple, and it's not only from a pedagogic perspective. It's simply how to give access to something that so far was dedicated to institutional investor. So the key question is how to offer this instrument in an affordable way. I mean, with ticket of a reasonable size. how to make sure that non-professional investor can have access. So super important, of course.
Yeah, a point well made. I think we've all seen, and we've all been around the industry quite a long time. There's been a huge amount of scaremongering, I guess, and talk of disruption. Now it's already happening, and even listening to the stories from each of you, you can see how much it's happening. What risks do you think there are in terms of the incumbents, in terms of the Google and the Amazons, the big tech entrants? How likely do you see it, and how fast do you think it's going to happen going forward? Maybe Samantha, because I know we talked about this the other day, and it was a topic that you felt quite strongly about.
I think I find the financial services sector a little bit sometimes too insular. So I think I think I was explaining that one bank was looking at another bank for their fear factor, if you like, of being left behind. And I was a bit like, well, I think, possibly you should be looking a bit further afield than that. Because one of the things that open banking, open finance and open data, the legislation behind that, I think we can't forget that the whole mode of operation behind that is to enable it to be available to any company, not just a financial services company. So suddenly that does bring into play the tech companies, companies that we probably traditionally wouldn't have thought would touch this area, because actually they couldn't. And I think that was what I was trying to explain, is that I think it can't be too insular. And you've only got to look at even just the retail world they are at working with the consumer. So we haven't seen Unilever, for example, embrace open banking, open finance yet. But my view is, well, when they do, how right will they get it? Because their ability to understand the consumer is staggering compared to the financial services sector.
I think you're not wrong, Samantha. The insularity of the industry has, I think, always been a challenge. And Martin, you've worked outside the industry from a number of different perspectives. What do you see as the main lessons that asset managers, could learn to avoid any kind of future disruption or take advantage of it?
Yeah, I think they've got it. I really think asset managers need to disrupt themselves. If they don't disrupt themselves, they're going to just be overtaken, as Sam says, by retail businesses. At the moment, they're not entering our markets because the fund management industry, because of regulation. Now, once they get over the fear of regulation, and they know their customers so well compared to asset managers, I think asset managers need to become more efficient, especially in the middle and back office areas of the business. I think that's where a lot of the inefficiencies of asset management lies. They seem unable, because they've been so profitable in the past, they seem unable to get that operational cost down to levels that they should be able to.
Do you think there's anything in terms of the type of people that are hired as well?
Yeah, I think so. I agree. I think it's like banking, whatever, asset management's similar to. I think it's pretty insular, and we all looked at each other, and as I say, it had been so profitable. You didn't need to. It was easy. You didn't really need to change, but that's changing now as the Revoluts of this world come look into the area of asset management. I mean, they're already dealing in stocks at 0%. They're transacting forex at 0%. So these are big disruptions in the industry. So asset managers have to disrupt themselves. If they don't, they'll be disrupted.
And Stephane, I know you see Allfunds as a disruptor and more of a big fintech at this stage. Any thoughts from yourself?
Well, it's true that when it comes to disruption, this sub-advisory platform that we are currently building is part of the disruption game. I mean, it's clear, and with reference to what Martin was saying before, that asset managers were making extraordinary margins, and now they are in an environment where their clients are facing fee pressure, and they need to help them to some extent to deal with these fee pressures. So clearly sub-advisory, which is not new, but so far it was something implemented by banks themselves, helping them to re-internalize part of the asset management margin in creating their own fund wrapper and delegating the day-to-day asset management to fund houses. Well, it's something that we want to intermediate because we believe that this technique, again, is not affordable to every private bank. So they need size, they need an infrastructure, they need everything. But clearly, according to the to consultants, it's a niche in the industry, if I may say so, which already represents 1 trillion of assets. So it's more or less 9% of the overall UCITS market, but it's supposed to grow up to 2 trillion in 4 years' time. Okay, so it's gonna have a huge impact on the asset management margins.
And bearing all of this in mind and the opportunity that's there, and I'm thinking really now of the trust factor and the lack of confidence that people have in the industry. Any thoughts in terms of what asset managers can do? And because when people are afraid, they act in a very different way than when they're feeling overconfident in the market. But what do you think asset managers can do more of to increase consumer confidence in the industry? Maybe Samantha.
It's my bugbear actually, is just tell me where my money's going. I mean, it's not hard, is it? I mean, I genuinely don't tell me about sectors and portfolios and what is it, emerging markets. I mean, what for a consumer, what is one of them? Genuinely, if I put 20 grand in my ISA, can you just tell me what's the top 10 holdings? Surely it can't be hard.
It's a great point. Any thoughts from anyone else?
Transparency. I think it all comes back to transparency, doesn't it? There's a perception that asset managers don't want to be transparent, and consumers therefore think they're hiding something.
Yeah, it's a great point. Stephane, sorry.
Yeah, no. Well, simply the fact that they should focus on their core expertise. Okay, it's a very straightforward, very basic message, but we all know that the asset management industry is structured as a barbell. Okay, where only the two extremes can survive. So the giants on the one hand, because they benefit from a huge scale effect, okay, and the boutiques on the other, who are fully committed to a small set of high alpha generating expertise. And in my view, well, the only one solution for those who are in the middle is either to join the Giants League, through M&As, or to refocus themselves on core expertise. So that's absolutely the key point.
Very good. And in terms of the asset managers that we see struggling at the moment, and there are quite a few struggling in this space, is there any advice that any of you would choose to give these struggling asset managers in particular?
Well, I think that was pretty clear. You've got to focus, I think, and especially if you're in the middle ground, sometimes you see asset managers trying to do too many things, and therefore a lot of the things they do are subscale. So they've really just got to concentrate really on what they're really good at. And unless you're one of the big giants, then of course you can cover the whole landscape, but certainly focus and do what you're doing well, because that's the key. You've got to perform. But I agree. I think that middle ground is a very difficult place to be.
Great. And final question maybe, and I'll start with Martin on this one, but it's one for all of you. With all of the expected changes and the pressures and all of the themes that we've spoken about, and each of you are leaders in your own right, do you think that there is a different type of leadership, either skill set or mindset, required going forward? Martin?
Yeah, I think that's a really good question, and it's quite interesting. At my old shop, Standard Life Aberdeen, they brought in someone who was very much a consumer banker, and I think that's interesting because the skill set of banking, especially consumer banking, could fit very well with where the asset management business is going. I also think you do need some exceptional technology skills now as well, because you've got to be able to run that middle and back office very efficiently.
Stephane, any thoughts?
Being agile, being tech agile in particular, promoting diversity. I think very basic things, but absolutely key in our current world.
And Samantha?
So I've got two really. I think if you haven't got a CTO on your board, then I think you've got to question your sanity. So you need to get on with that. And then on top of that, I really do think, and I'm not saying it just because I'm female, but I really do think embracing flexibility in the workforce, not just because it obviously really does have some benefits to women, but I think also in this pandemic, one of the things I've really noticed is how much men have really absolutely thoroughly enjoyed more time with the family. So I just think, enabling people in their lives to have, I think we call it work-life balance, but I think actually just letting it mingle so that you can do a bit of each as you go through life, and so it's not so cut and dried, I think is going to be critical for success going forward.
I think there's a limit, Sam, to that wanting to spend time.
Well, yeah, there's always the 1% club, isn't there, that wants out.
Well, a fascinating topic, and one I think that's going to continue in many asset management boardrooms over the next couple of months. Samantha, Martin and Stephane, let me close with a huge thanks to each of you, individually and collectively, for your insights, your candour and your contribution. So thank you very much.
Thank you. Thanks, Nuala.
Bye-bye.
Well, that's all we have time for in this session of our Empower Leaders series, but there will be plenty more to come. I'd like to thank all our brilliant interviewees and panellists for their contributions so far. Thank you for joining us, Nicolas Calcoen, Nuala Walsh, Martin Gilbert, Stephane Corsaletti and Samantha Seaton. We look forward to hearing more about how these trends may develop over the coming months. I'd also, of course, like to thank everyone who tuned in, and if you found the topics discussed interesting or submitted questions, then do keep an eye on your inbox, as the Empower team will be in touch with all the questions asked and the answers given by our expert speakers. There will also be more information about how you could get involved with future Empower Leaders events. You can also find out more about Empower and our other virtual and in-person event plans by visiting informaconnect.com/empower-leaders. For now though, from me and the whole Empower team, goodbye.